All right, it is Thursday, January 8th, going over the markets here, starting off with the S&P 500. And today it went and it came back down from the original entry that was right over here and hit the 0% line. So when that happens, the exit moves to where the original entry was, the green line right there. And I'm going to say this is good enough to be, actually it's not quite done yet, so it has a little bit more to go, but there's no way I'm getting in right there this close to it being the exit right there. It's only, I mean, you only have from where price is right now, 7 points or so or something like that. And still, it could reverse all the way down. Not saying it's going to, but it definitely could. So yesterday I was in right here, and then you see it came down here. I got in right down there. Then I got out real early, and I'll talk about that later because I was in a bunch of other trades. I needed to get out with any profit I could because I was going to get margin called by the end of the day if I had all my trades open. And so I just got to hit with this one. But this trade is still open right here. But going into tomorrow, what I will be looking at is when the market opens up is we have this one that's already one that it hit, but as you can see it's real close to going up there getting hit, so I can't take that one right now. So actually, yeah, that one's already done. No, that one. So yeah, there's already trades that are already going on in it. That one's way too far away. So unless when the market, we still have 6 minutes till the market closes, and then an hour after that it'll open back up. Unless when the market opens back up, it's probably gonna close right around here. If the market opens back up and we get a decent size retracement down to here, what I would be looking to do is taking it all the way down at today's lows or just slightly after it right there, just only assuming this doesn't go up there and get hit. If it does, which it more than likely will, it's only about 7-8 points away from it, then that one's done, and we'll just have to wait until we get another pullback. We get another orange semaphore. There's the orange. That would wait to another pullback, another orange semaphore, and then we'd just draw the Fibonacci numbers for it and look for a long setup. But yeah, today was a down day compared to yesterday, because you can see there's the high, there's the low. Today here's the high, and today here's the low. So downtrend has started. We'll see what happens tomorrow, if the downtrend will continue. A good way to look at the market if you're going to get a really drop off for the day is right when the market opens up. If it goes down and creates a new low, then that's a signal that we could have a real steep drop off for that day. See, it looked like it was going to. It held on for a little bit before it finally made a lower low from the day before, but then it closed up stronger today. Because I'll show you here, where's one real quick where the market just explodes. Like here's one right here. So the market opened right here, and then within 5, 10, 15, 20, 25, 30, 35, first 40 minutes, we made a lower low from the previous day. So that's a signal right there. If it makes a low within the first hour of the opening, look for a drop off in the market that day. Same thing, opposite way going high. Let's see if we can find another one here real quick. Doesn't happen all the time, but it does happen a lot. It is a signal just to show that look for a big run that day. Like here, made a new high pretty much around open, but it's pretty much a nothing day that day. But it was also the day after Christmas, so that's not anything new. Oh, here's one. Well, look at this. The market gapped open right here from when it opened, and then it just took off for that day without any pullback. So those are just a couple examples right there. It doesn't happen every time, but it is kind of a rule of thumb for something to look for, to what to expect for the next day. Going over to the Russell 2000 right here, I really, to be honest, did not look at this market at all today. I was enveloped in the S&P 500, oil, Nasdaq, silver and gold, so I had a lot of other stuff going on. But basically the only good trade today would have been this one right here. You have that, but it was a real nothing burger, and by the time it hit, it was at 4:45 a.m., so I was definitely still asleep, and it went up right there, and it really wasn't a big gainer at all, because the Russell is only 2.3 points, and in the Russell, that's nothing, that's no money, so no reason to even look for that. So we do have this setup right here going into tomorrow. Well, actually, we have this one previously from the other day from red semaphore, and there's the next red semaphore low. So price goes up, hits it right here, which is about at 26.41. Then the exit we are looking for is 2736.8. So that'd be a nice little run up right there if it does go up and get hit. Yeah, 3.5 points. We do have another potential long here. Let's see here. Using that red semaphore, that red semaphore. Okay, so this is a live trade right here. Went up and hit it right here. So the exit for this one right here is going to be just about like that. One thing I do like to do when you have two setups and one is already live in it, so you can see this one right here is already live going up to that one. Well, if this goes up there and hits this one and gets it out, well, then this would open up this trade right here. So what I think I might do is when the market does open is look to get in right here. And then assuming the market goes up and hits that, well, then that's another entry right here into the Russell. And then the exit moves for the next entry way up here. So really what you're doing is you're getting in at a little bit of a better spot down here than when the entry would be right here, because it's already in this previous move right there. So that is, I think I will look to do that when the market opens back up. It's closing in 2 minutes. We'll open up in another hour. Let's see here real quick. Did we anything go on here? No, did not go down and hit the green, so it doesn't look like there's. Let's see about this one. Okay, we do have a live one right here. See, this is where I'm looking at getting closed next. So there's the entry, goes up there, got very close to the 0%, and then came down right here and hit that one for it. So when that kind of happens, that's what I'm looking at, just closing it off right there and being done with it, because otherwise if I'm waiting for it every single time to hit it and then go there and get that, then that's not going to be good enough. And I've seen that happen a couple other times, so I'll go ahead and call that one done and just make a note of that here in the future, because what you're looking for is like when this hit this, you're expecting it to continue the momentum down and go hit the purple line. So when it doesn't, this is the contingency plan to get in right around here and then out somewhere close to it. So you get a little bit of a profit assuming you got in at the green line right here. Like for instance, you get in right here, say your exit's right there, you get in a little bit below it, and then your exit's right there. 5.2 profit, 2.5 loss. So just a slight winner right there, but it's better than a big loser. And so we'll see. I'm not sure though, because it's still hovering around the 6.85 level right here. If the market takes off and just blows past it, then we'll definitely go that route from now on. If not, then what we would look to do, so what I'm looking to do now is, after looking at this, is I'm going to wait and see if when the market opens, if this thing still is in effect, see how this thing didn't get hit right there. And we're looking for it coming down to at least the 100 line, just the top of the Fibonacci retracement level for tomorrow. If it does that, look to get long right there, because then we'd be in some good long ones for it, for that one. So that is what's going on in the Russell. Dow Jones, this is another one I did not look at all today, so not even really sure what's going on with it right now. That one to that one's way too long. That one didn't get filled. That one's already been done. As you can see right here, here's the long one that's already been completed. Right there. So yeah, not a whole lot going on in the Dow Jones right now. I mean, we have this one we could look at for going in tomorrow, but that's way up there. That is 1.22% away from it. So yeah, not much going on in the Dow Jones. Going on to oil right here. So this is one, it did hold up. See the 4.32 extension level. Here's the one, the original setup using that semaphore. Those are the next two lows right there. There's our price entered in right here. Did not hit the purple line to complete it. And then this is kind of like the Russell I was talking about. This actually did go down and hit the 100% line, but it did not go up and hit the 261.8 to completely close it out. And that's what I was thinking, okay, maybe I need to just make it, the exits, a lot shorter than if it's not going up there, hitting the purple line, it's going down there and hitting that and getting in there. So again, say you got in, slightly above it to ensure you got in, and then slightly below it to ensure you got out. So that was my original. And then get in out. This one is 0.39 and this one is 0.15, so it's 0.24 profit right there. So you still make a little money for it, not as much as the other ones, but that's perfectly fine. But it did end up working. 423.6 extension level held. Bounced around, kind of a triple bottom, went up, and then I had my exit right up here and went up there and hit it right there, because I also got in right here, and I think one more right around here somewhere. And so that one was that one today. And in fact, you know what, I'm going to mark this one because that's a good example to go back and look at right there. So going into tomorrow for crude oil, is there anything going on? This one's done right here, red. We'll see if this one is done. This one is not done. So this is a live trade right here, a live long for crude oil. The target is 59.18, maybe slightly below it. But as you see, it's already run off from the original entry, which is right here at 57.92. So the only way I'd get into this if I got to pull back, and I'd look to even get in below the line right there. Here's today's high. Here's today's low. Let's see what there's the 30, so probably the 38% from the previous day. That's where I'd look to get in right there, just for a little target area, rather than just waiting for the pullback to the entry point for it. I just wait for 38% from the current day, which is fixing to be the previous day. So there we have that. That'd be a good entry point that I'd look to get in, and then the target still remains up there. Then price comes down to the zero, you get into the zero line, and then the exit moves to the 423.6, assuming that happens. All right, going over into the Nasdaq right here. Let's see what we have going on. Yeah, so this is one I was in today, but this wasn't the crazy one like silver was today. So this is what I talked about yesterday. So here we're using this red semaphore. Here's the next red lower semaphore. There you go, went up and hit it. So that is the entry right here. And then when price opened the next day, I got in right when it opened. So it got me an even better than the original entry point for it right there. And then price did come back down, almost hit the zero line right there. I actually had a buy order down there. Obviously did not hit. So the exit is still way up here at the purple line. I'll draw a little box right there. So it's lines 26,400. That is where the exit currently is. And so from the current level, there's quite a big gain up right there. I had my exit right up here. I'm not really sure why I had it right there. I should have had it more like right up here from the higher high of yesterday's. But going into tomorrow, I'm going to move it back up over here to see what happens. Then I'll look to get in back down here if the price does retrace all the way to the zero line, because that'll be the next exit to get in. If that happens, then the exit moves right above or right below the original entry point at the 261.8, the green line right there for that one. Good old silver today. Oh man, silver was a bear. Goodness gracious. So using these two red semaphores right here, because silver has the highest margins, over 7K now per micro contract for it, and so that just went up recently because it was around like 5,000, and the AMP just raised it. So that's really awesome. So using this, there is the entry right here. And I normally silver don't hold it on until forever. Just like I said, the margin is so high, it has the biggest moves, it can make you the most money and also have you lose the most money. But there was the entry, came down here, hit off the zero line. You see I had an order right here, and then got out with a slightly profit right over here, because as you can see, let's see, 78.10, 78.1 is right, close enough. 76.585. So we're going down here. There we go. And then from where's my bar? Here we go. 74.225. Good enough right there. And then 76.585 right there. So 472 winner, 304 loser right there. So what is that? That's 168 ticks profit in silver right there. So very glad to get out of that one for profit. Got it at 230 when price went up there, got me in profit for a little bit, and then just got out. You see it just kind of finagled on. So currently silver is, the exit is the green line right up here. Right up here. The only way I would get into it next is, since we have started downtrend, we have 2 consecutive days with it going down. See this one, there's the low red line, there's today's low red line. Is what I do is I would have an order right around, actually may have the low of the day, the low of the current day going into tomorrow, have an order down there, and then the exit would be right up here, because a lot of times what will happen is price will come down, create a new low down here, and then if it's going to be a good rebound day, it will go up all the way and create a new high compared to the previous day. So it goes down, creates a new low from the yesterday's, and then goes up, and the current day goes up and creates a high compared to yesterday. So you have a lower low but a higher high compared to yesterday. It's just kind of like an engulfing candle. It's basically an engulfing candle is what it is from the previous day. And so I really like the way that those trades work out. Obviously they don't happen all the time, but when they do, they're awesome. Let me show you, especially when you're in a trade setup like this. Now going into tomorrow, you know, silver could open and then just go straight up and hit it and bam, done. Hey, that's perfectly fine. But with how high the margins are and how much money can be made in silver, it is way better to not be aggressive with it. It's way better to miss out on trades and then miss out on some trades. That's fine. But when you get in like on a bad entry because you're being aggressive with it and it goes against you, that's when it really, really hurts. So it's better to miss out on 9 aggressive trades, especially if it gets you in 2 bad ones, even though you may get some, even though you get some winners in there, and wait for that one good one where you have a much better entry and the profit margin is way higher, because it just takes out so much stress than what it can cause. So let's see here. Yeah, here's one right here. So like here's what I'm talking about, the engulfing day. So here you have the previous day. Let me make this a little bit bigger. Here you have the previous day right here, and I'll even draw a rectangle around it so you can see real easily. There it is. There it opened up higher, created a new high for it, and typically it goes up to either to like the 1.236 or 1.146. Let's see. Yeah, see, hit up the 1.236 extension level. I used to have those on there, but I just took them off because I don't trade for them anymore. It's just one extra bar on there. But that's typically how, if price is going to reverse, it's going to go up around that level right there, and that's what it hit for that day. So there's the high, and then look, it reversed, came all the way down to low, and hit the 1.236 the other way, and that was the end of that day. So when that happens and there's a trade set up that you can look for to get into it, that's a great way to do it. And so that's what I'll be looking to do down, where is it? In silver right here. So what I'd be looking to do is there's that day to there, so right around here actually would be more close to the 61.8 from the original move Fibonacci that I'm using for it right there. So that is that one. And then last but not least, we have gold. And here's gold right here. Gold, this is one trade I think I mentioned yesterday. I got in at a bad entry because I had messed up my Fibonacci placement on it. Yeah, I had it right, I think, right. Let's see here. Why can't I grab it? There we go. I think I had it right. Where was it? I don't know. But what I'd done is I'd missed it. And so it did. Oh, it was right here. That's what it was. So I got in right there, even though that wasn't the original entry. It was supposed to be up here. So missed it and stayed in it because my reasoning was silver is in a long position. And if silver goes up, gold's going to follow. And sure enough, fortunately it did. Here was actually the true entry right here for it. As you can see, it has been hit right there. So that is currently in a long from this original setup right there. But I was in right there, got in at the 100 again right there, and unfortunately price came back up, just giving me a small profit to get out of it right over there because I was trying to get as much money as I could out of the market since I was battling silver right then, silver today. And so anyway, that one started. Then this is another interesting one right here, where if I can get a better entry down over here, that'd be awesome, because we have another potential long in gold right here using that semaphore and that semaphore. And to have a red semaphore, you have to have an orange one within it. It goes green, orange, red. I don't use the greens because those things just make your charts look ugly. But the reds are the stronger ones, and to have a red, you have to have an orange within it. So that's why you can do an orange and then a red for that one. So anyways, orange and orange underneath it, or that's red. So those are the next two connected lower ones. So from the previous one that I mentioned right here, we are currently long with the target being the purple line right up here. But if the price does go up and just goes a little bit higher and hits the green one, well, then that puts us in this trade right here, and then the target goes up way up there. So those are things that I'm looking for right there. But what I'd rather see, just to be safe for it, is if silver goes down, then hopefully gold will go down some, get in better, probably look at something like I just like using Fibonacci retracements, maybe down to like the 38% for that day, get in right there, and then you'd be in a good little spot to hold it right there. If it goes up and hits that, then you can even look for a Verlin S gain right there. But that's that for today, so take care, bye.